Alright, welcome to precisealgorithmtrading.com. It is Tuesday, February 13th, 2024, and well, the markets went a little nuts today. Not that we haven't been expecting that sometime. It just didn't need it all at once, but that's alright. Let's see, here's our automated trading systems. So this volatility picking up actually helps our automated trading systems. So um, anyway, this is the Dow, and we've got new green dots today. So we got new high equity in our equity curve, and this is what it looks like for today's trades. Which, like I say, that volatility picking up helps. Um, you can't avoid, at least nothing I've found, where you can avoid taking losses, and that's kind of an axiom of the market anyway. So, but what you're looking for is wins like that and runs like that, and there's more of those than really runs like these up here, just because that's what it takes to make an equity curve like that. Here's the Russell, and we got new peaks on the Russell as well. Today's trades look like that, so sort of similar. And we've had a nice bunch of runs here lately to the upside. And then the NASDAQ is not at new peaks yet, but it's trying. So this pullback has been rough to take, but it's starting to come back. And that's kind of like what this was here. So, and really a lot of this back here. So, and there's a nice trade right in the middle of today's trades. So more losers than winners today, but that one winner really makes up for the rest. All right, let's go to the charts and look at the markets. I'm going to just use the index products so you can see the S&P 500 today was down 1.37% or 68 points, and we gapped lower. So this is another thing in the markets that tends to happen, is gaps get filled, and I don't want to say all gaps get filled. This one down here, if we went back and filled that one, that's going to be a long way down. Not that it can't happen, but you can actually look back on charts. There's a gap that got filled to the downside. Here's a gap that got filled over here. So it can play like that, and it's kind of wild. I don't know if we could zoom that out far enough. Doesn't look like these gaps back here got filled, but you can see it in charts a lot. There's a gap there. There's a gap lower. They both got filled technically. There's a gap that got filled. So over here, what I'm expecting at some point would be this thing to come back up and fill that gap. It doesn't have to happen right away. It could be all the way like after a month of sideways action or sideways to down action, that type of thing. And anyways, just wanted to point that out. So the Dow Jones Industrials today, big red candle, not without a tail, so it's got a little tail, which means we got some support there. Just happens to be right at the 30 period moving average, and it was down 524 points today, so we're at 38,272. I'm still wondering if we're going to hit this 40,000 sometime maybe this year. So the Russell did not fare, I mean, it looks bad, down 3.96%, but we're really chopping sideways in the Russell, and all we need to do is break out of this thing, and it could be really interesting. So the NASDAQ was down 1.8% today, and actually ended up with a bullish candle that closed higher than it opened. So not that that means a whole lot when you're down 1.8%. But, you know, these kind of moves have to happen. It's just moves can't go on in one direction forever. I'm going to go back to these futures products because I think we had something drawn that I want to call out, and I think it's in the Russell. So, yeah, it's right there. So there's that channel line that I was talking about before, and it's come back and retested it, which is normal after a breakout like that. Now the question is going to be, does the channel just get wasted here and we come back inside all the way, or do we start to pick back up and like take off out of here? That'd be really wild, because that means the Russell would start to lead, from what I can tell, back to the upside. Maybe that'll happen while the rest of the market goes chopping sideways to down for a while, and that would be telling, really, of what the institutions are trying to do. Alright, let's look at the transports. So the transports are down 2.62%, and they're pretty much chopping sideways here lately. Oil went up 0.75% today, and it ended up being in a doji looking candlestick. So a doji is a candle that opens pretty much where it closes, and it has some range during the day, so you see the wicks, but it ends up being more or less a cross. This one actually is a little bit of a bearish doji because it's got a little bearish body, but it's still pretty much a doji, and it really calls out indecision. So you get a gap like this, and then it goes up a little bit, and then we gapped higher, but now it acts like it doesn't know what to do next. Well, it's still working in our favor, which, you know, being long the oil market right now. And if you go up here to the actual oil futures, it's similar, but boy, it is different now. Just the pattern, the way it's, just to compare the two, is kind of interesting right now. I'm actually going to pull up over here the daily chart, turn off my colors here and the colors here because I'm wanting to do another thing anyway. So unlink that, and then we'll put USO on this side. And you can see how similar they are. Yeah, they're pretty similar. I was a little freaked out about this move here, but we kind of got that. It's just, it drew the line straight through for whatever reason. So they're pretty similar. So while we're here, I was going to pull up the VIX on one side and the S&P 500 on the other side that we've been watching. And this is that, well, it's a Keltner channel. I'm going to hide it, edit, go down to here. It's the upper band and the lower band, and that's not on there now. And then if I go pull up studies, edit study, and I go over here and I say cross, yeah, Bollinger Band cross, one right there. This is a study that I made, so it won't be in your system if you happen to be looking for it. And it pulls back that Keltner channel, so I'm going to get rid of it again. So all we're looking at is the pink line. That's the Bollinger Band. And you can see here, this is what I was talking about yesterday and really for the last few days. We were sideways into this Bollinger Band inside of it, and now we've broken higher, and we've clearly broken higher. So the bad news is for really S&P 500 plays is this is not over. We might get a pullback tomorrow just to head fake everybody out to be like, I mean, we've got futures right now that are, I won't call that positive. They're mixed, but we did have like Coca-Cola had earnings that I heard beat forecasts, and I don't know if it was Uber or Lyft. One of those said that they had better than forecasted earnings and better than forecasted sales. So those types of companies might pop the markets in the morning, which would pull this back in, and then we could see what happens the rest of the day. But um, I could see, this thing eventually getting back up to this level without much effort. If we actually just hung around and came up into the 20s and then came back down again, that's happened in the past. You'd have to go way back on this chart to do a study if you really wanted to. You could get a pop like this, literally, we could be looking at something like this, and then it went complacent for a long time before it popped a couple times and then got complacent again. So anything can happen out of this thing is kind of the point. But right now we still have a lot of bullishness in the market. We have bullish percent indexes that are fairly bullish and holding up, even though they're all, I think a lot of them are in columns of O's, but there's been a lot of support in the markets lately, and I think there's a lot of money out there. So where they put the money is kind of the key, which is kind of the key to our system in the first place. All right, so let's jump over to stockcharts.com and look at the bullish percent indexes and get out of here. The USO, look at that. The Dow Jones Industrials actually tacked on 2 new green X's to the upside and went negative 4.35%. So that's an unusual move. That means sometime during the day they moved quite a bit higher and then they pulled all the way back. So that's sort of weird. The NYA went down 3.99%, kind of expected. The transports didn't move today. So like I say, kind of resilient, holding up during a market like this. The NASDAQ went down 1.61%. We shouldn't lose the fact that we're still on a point and figure buy signal. We're just in a column of O's. The S&P 500 tacked on a new O to the downside and went down 6.18% today. The OEX, which is the S&P 100, tacked on 2 O's and went down 7.69%. And the NDX is a point and figure sell signal now, down 6.85%. So if you're long Facebook, Amazon, Netflix, and Google, you better be watching your stops and making sure they're where they belong. A lot of those things were kind of high flyers for a while, and I've been tightening stops, except for, actually Apple right now was kind of playing the opposite direction of the market. I don't know what it looks like today. So so far it's holding up, and that's my market report for today. So take care, guys. Have a great night, and let's hope some of this volatility subsides, or just keeps up just enough, and so it holds up our bullish positions while we kind of reposition the markets for maybe a sector rotation, and we can start picking up some value plays. So until next time, take care.